Hey guys, welcome to another video here at Financial Hub, and today's video is quite different and very special. So you're going to have a nice treat today because I trust me, if you watch till the end, you're going to improve your trading approach 10 times or even 20 times better than you're trading at the moment. So in today's video, it's a short snippet that I've taken out of one of my online classes here at Financial Hub, and it was part of my strategy classes. It was just the starting point of it, not the whole of it, because the whole of it I teach you in the class itself when you take our course. But I found it quite good to share with all of you because I am here to help the masses as a whole. We're here to help you improve your trading strategy, and if we can help you through giving you short nuggets of wisdoms here and there, then feel free to do that. So watch this video to the end and you're going to understand a bit how I approach the market. You're going to understand how to look at the trend direction, the true trend, because at times we tend to confuse the direction of the trend looking at 1 hour, 4 hour, daily chart, 1 week, and all those time frames you're looking for the direction of the trend. Now I'm going to teach you how to put that into perspective and what Ken likes saying, putting it into context. In this video you're going to learn how to do that. Other than that, you're going to learn how to use the Dow theory or the trend theory. I call it more of the trend theory because the Dow theory entails a lot, but it's sort of a little bit stolen from the Dow theory that was invented back then in the 1900s by Charles Dow, and I use part of that theory to get the direction of the trend. So I'll show you how to follow certain principles that will help you know the direction of the trend, and putting it into perspective, what time frames to be looking at, because there are three major time frames we're normally looking at: the higher time frame, trading time frame, and the lower time frame. So in this video I show you how to differentiate the rest. Okay, so watch this video, enjoy, and I'll see you in the end. So that's what I want to show you guys. Technical is fun, okay? What you're seeing on my screen, I'm going to make it fun and simple and easy. It is not rocket science. It is not anything complicated. It is simple, straight to the point. And basically what you're seeing on my screen, the technical analysis, is information. It's giving you information. Information about what the markets are doing, information about what participants are doing. For example, what you're seeing on my screen is the gold market. So before I go to the gold market, the website I'm using, which will recommend all of you to open if you don't have one, that is tradingview.com. So we recommend all of you to open an account with tradingview.com. Okay. Now, what tradingview.com is for, we use it for analyzing the market. It gives us access to many markets. It gives us access to many trading tools. Okay. These tools that we use, what you're seeing on my screen, if I remove them, it's like this one, it's blank. But it gives us access to many trading tools, gives us access to many trading indicators and what not, okay? So those are the few things that we'll be looking at. But if you don't have an account with TradingView, please, if you can open one today, because we'll be spending a lot of time doing a lot of technical analysis. You'll notice that we won't focus that much on fundamentals. Fundamentals are important, and I'll give you the connection between the both. So if you have a pen and paper and somewhere to write, please, we're going to jump into it. So anyway, so in the previous class, so I want to show you the difference and the importance of fundamentals. So I'm not saying we ignore fundamentals, okay? It's important to pay attention to it, but I want to show you the difference between fundamentals and technicals, okay? Because you're going to see that we'll have about 7 technical classes, but we've only had 1 fundamental. So I'd like to differentiate the two. So if you're in my first class, I remember mentioning this. Fundamentals, okay, what Tara's taught you, answers the question, why? Okay, why? For example, you see what's happening on my screen? Markets are moving from down here, from the down left, okay, to up right. This chart, okay, this is what we call a chart. Okay, a chart is sort of like a graph, and the graph on the x-axis over here, we have the time, okay, time, in this case, dates, okay, and over here on the y-axis, the vertical line, we have the price. So it's time against price. So as market is moving up, it basically means its price over time. The gold market has been appreciating up in price, okay? So when you look at the markets and you're seeing it going up, it is most people assume, and they say, if I ask them, why is the gold market moving up? They'll come and say it's moving up because I can see it moving up, okay? Now, trust me, my friends, that is not trading. The market is not moving up because it is moving up. There's a reason why it is moving up. And the answer of why it is moving up is not found in technicals, it's found in fundamentals. Okay. For example, Taras taught you about interest rates, okay, inflation, unemployment, okay. I don't know if you touched on, but also there's politics, okay, things like war, trade, trade relations. Like right now, if you pay attention to politics and all that, you can see how it affects the currency. Because now, when you're talking about fundamentals, you're talking about different economies, different countries. Fundamentals is sort of a fancy word of just saying economic analysis or economics. Okay, it's just a fancy name that we use in trading. It's different lingo, different language, meaning same thing. So you're just studying the economy. Why is the economy strong? Why is it weak? If the economy is strong, also we'll normally see, not all the time, but sometimes we'll see currency appreciation. The currency is appreciating. So in this case, okay, so if I use an example, let me give you another example so that you just understand fundamentals. Let's say you're looking at fundamentals of stocks, okay, stock company. Which company, for example, we all know Safaricom, okay? So you want to know why is their currency strong or why is their currency weak? Okay. Why is the currency strong or why is the currency weak? So the reason that it will make the currency strong or weak, now you look at different fundamentals. You want to look at their revenues, okay? You want to look at their expenses. You want to look revenues minus expenses. If they have good revenues and low expenses, of course, it's profit, okay? You want to look at what products do they have, okay, the products they have, a good product. What's the price of that product? Is it a product that people can afford to buy? Is that product even a product that people want? So such stuff. Which regions are they in? Like now we know Safaricom has ventured into Ethiopia. We can see recently they released the data of the financial year and how they have staggering profits. Okay, so all those things give value to the stock. And why will the stock move up? It's because of this positive data. Okay, you look at the team. Okay, you want to look at the team and the leaders. Are the leaders and the team competent? Okay, you won't invest in a company that you don't have competent leaders and people who can execute and do what they need to do in order to make money for the company. So in this case, when we're looking at stocks, for example, like Safaricom, these are the reasons, these are the fundamental reasons why the stock should go up or down. If you look at the opposite, revenues are low, expenses are high, you don't have profit, you actually have losses and maybe even in debt. Okay, the products are not products that people want. Okay, they're in very bad regions, the regions where they are, their products are not needed, it's not meeting a certain need. Team and leaders are incompetent, they're not doing what they say they're going to do. But when you have such, the currency, or I mean, the stock market of Safaricom is going to go down. Okay, so that in a nutshell is fundamental. You compare now that to currency. Now, when I talk about currency or FX, the Forex market. Okay, currency or the Forex market. Let's come back here. Okay, currency or the FX market. Okay, now what are we looking at? I said here, when you're looking at stocks, you're looking at companies. Which company? For example, Safaricom. When you're looking at currencies, you're looking at economies or countries. Okay, in this case, the United States of America, for example. So you want to look at the fundamentals of why will their currency go up in price or why will their currency go down in price. So such things, like I've just said here. Okay, that's the exact same. No need to rewrite them. Okay, interest rates, inflation, unemployment, politics, war, trade relations, etc. Okay, such stuff give very good advantage to the currency and it gives it strength. So that's fundamentals. So it's important to understand fundamentals generally, but fundamentals do not, to us, we believe fundamentals do not, trading it alone doesn't give you an edge. Why? Now you need to come and mix that with technicals. So if I draw a line here, let's look at the difference. Okay. Now when you're looking at technicals, now this is what we call technical analysis. Okay, so there's fundamental analysis, which is the big picture. Okay, why is the currency moving up or down? Like this case, gold. Why is gold moving up? So you come now and look at technicals. Now, technicals answers two questions, unlike fundamentals, which answers the question why. Technicals answers the question when and how. Okay, now what do I mean? We can see market is moving up. Market is moving up because of a fundamental reason, not a technical reason. But technicals is a representation. Okay, so get me close. Technicals, what you're seeing on my screen, is a representation of what is happening fundamentally. So this is an indication of why market is going up. It's a representation, I mean. This is a representation of why the market is going up. Okay. Now remember, these fundamentals what will cause buyers and sellers to either buy the market or sell the market. Technical will represent that purchasing of that commodity or instrument or currency or stock, or the sell. Okay, if it's a strong buy like what you're seeing here, we'll see the markets moving in an uptrend. That's what we call an uptrend, where the buyers are stronger than the sellers. Okay, this is an uptrend. Okay, so technically we can see market is going up. We know why it is going up, because of a fundamental reason. Now the question that comes to play is, when should I buy and how is the market moving? Or when should I buy, when should I sell? For example, markets are moving up, sasa. You do not want to buy here. Okay, this would be a wrong move to buy up here. You want to find a way to buy down here. You do not want to buy up here. You want to look for a system or a strategy that can help you buy down here. Okay, because if I add on this, okay, technicals help you do two things at the same time. They help you be right on direction, okay, and right on timing. Okay, fundamentals alone will give you the direction that I know markets are going up because of a certain reason. But if you come and buy here, so notice here, you're very right on direction in the long term, okay, but you're very wrong on timing. So this whole time market is moving against you, you're losing a lot of money. Okay, so technicals come and help you know when to move, when to buy, okay, when to buy, when to sell. Okay, so if I continue, you do not want to buy up here. You want to find a way to buy down here. You want to find a way to buy down here. Okay, technical analysis is all about helping you figure out when to buy, when to sell. Those turning points. That's all that technical does. Now, people tend to complicate it. If you look at different charts, if you look at different people analyzing the market, they tend to complicate. I mean, they tend to complicate the market too much. They have too many things going on. They're looking at they have too many indicators. They have too many things on their screen. Now, trust me, technical analysis should be simple. Okay, it should be very simple to give you a guide, to give you the direction the market is moving towards. So, like I said, technicals are helping you answer the question when. So we've talked about when. What do I mean by how? Now, how is a representation of how market is moving in that direction we're talking about. So for example, we can see markets are moving up. Okay, so markets are trending, it's moving up. How is the market moving? Is it moving with momentum? Is it moving with slowing down momentum? How is the market moving? So those are things you also want to answer. So you can see in this case, markets are moving with strong momentum to the upside. Okay, strong momentum. Okay, strong momentum, correction. This is what when markets are going in the opposite direction, we call it a correction. Strong momentum, a long correction. Strong momentum, sideways correction. Strong momentum to the upside, correction, momentum to the upside. So that is what we are looking at when we're saying how. You cannot see, okay, you cannot see the direction, okay, of how market is moving through fundamentals. Fundamentals is information. Technicals is a visual representation of how that information is being responded to. Okay, how people respond to the fundamentals, okay, will be represented in technical analysis. Now, the disadvantage of fundamentals, okay, is that we have to rely on what? Remember, fundamentals is all about information. Okay, It's all about information. Can you get who will tell you about interest rates? You don't just wake up in the morning and just see interest rates floating around you. Fundamentals is not like technicals. You see what we're seeing on our screen? We can see technicals, we can see what is happening, but we cannot see fundamentals. We cannot see. We need information, and information we have to rely on other people to tell us. Okay. For example, if interest rates are coming out, we'll wait for the Federal Reserve in America, who are just like the central banks. Like we have here in Kenya, we have Central Bank of Kenya. America, we call them the Federal Reserve. In England, we call them the Bank of England. Canada, Bank of Canada. Okay. In Australia, it's called the Reserve Bank of Australia. Okay. Japan is called the Bank of Japan. etc. So, that's how we call it. In China, I believe it's called the People's Bank of China. So such stuff. So we need information. So we need someone to tell us that these are the interest rates that have been released. Now, the disadvantage of that is that how will we know that information is true or false? Okay. So you can be misinformed. Yes, you're informed, but the information is wrong. So relying on fundamentals alone, to us, we believe can give you a weakness, because how do you know that? You might be told something, this is what has happened, but it's not the truth. Okay. Or you don't know how true it is. Okay. Another disadvantage is that it is slow. Okay. Remember, for you to get information, it means you have to rely on someone else getting information and then sending it to someone else, then someone else publishing it. Okay. For example, we get a lot of information through, let's say, for example, news. You're watching Bloomberg, you're watching someone represent what is happening. Okay. Now, remember, that person who's giving you that information had to wait for also him or her to get that information, write down a script, wear some very nice suit, and then go in front of a camera and talk about it. And when they're talking about it, they're just giving you their bias. Okay, humans are biased. They're not neutral. They'll just speak about what they think the market is going to do, what is going to react. So it's slow and very falsifying sometimes. Okay, so we do not rely on it 100%. That is why we come and mix that with technicals. Okay, now technicals is the opposite of this. Why? Because technicals is true. Okay, what you're seeing on my screen, okay, what I am seeing, if you open the gold market daily chart, you're going to see the same exact thing that I'm seeing. We're all seeing the same thing. So we're all, sorry, yes. We're all seeing the same thing. I'm seeing the market going up. You're also seeing the market going up. So it is, what I'm seeing is what you're seeing. What someone in China, what someone in the United States, in America is seeing is the same exact thing I'm seeing. Okay. So wherever you are, we're getting the same information. Hakuna kitu imechange. Okay. And it is also real time. Okay. It is not slow. What you're seeing here, you can see here, there's a countdown here, which we'll talk about later. But what I'm seeing here this time is exactly what is happening here everywhere in the world. We are seeing the same exact time. So it is real time, what is happening there. So that is why we're going to spend a lot of time looking at technical analysis, because it's an add-on, a very big add-on that will give you a plus over fundamentals. So that's what I want to get into right now, Sasa. I've talked about fundamentals, which answers the question why. Why is market going up? Why is market going down? Or why is market moving sideways? Because markets can either do either of those three things. Go up, go down, sideways, like what you're seeing here. We're going up, then down, up, then down, up. Over here we got a bit of sideways. Okay, up, then down, then up. Now it's moving down. Okay, markets can either do either of those three things. Okay, so now over here you can go do more read more information on it. Interest rates, inflation, unemployment, politics, war, trade relations. If we were to sit down and break all those down, Taras did a good breakdown of general what they all are. But to get more information, you can go read on it. So remember, lakini fundamentals for us is very false. We don't know whether it's true, and it's very slow. Why is it slow? Let me show you something else. Now, this is just extra information. Okay. If you look at big companies, okay. Now, in the big companies, kwa hii industry yetu, the big people, wasa wako huko juu, they're called investment banks. Investment banks. Okay. Investment banks or and hedge funds, not all, and hedge funds. Okay. You can do your research on them. But if we're looking at investment banks, okay, if I just come here and search biggest banks in the world, okay, biggest banks in the world, here's a list, okay. Now let's go here. Let's go to Wikipedia. List of the largest banks, because you're competing against these people. So I want to show you how they have advantage on fundamentals more than you. Okay. Now, these are the list of the top 100 biggest banks. So, you can see it is total assets, okay? How much money they have under management, total assets under management. Now, it is in billions, okay? So when you're looking at this, let me zoom in. 6,300 billion. We're talking that this bank alone, Industrial and Commercial Bank of China, which is the largest bank, you can see it's written here, the largest bank in China and in the world with a total assets of 6.3. This is $6.3 trillion. Okay, that is one bank. If you look at the top four, okay, top four biggest banks in the world are all coming from China. Okay. They're called the Big Four. You can see here, it's written here. It is one of the big four banks of China. So, these four banks alone combined have over $20 trillion. This is just different banks in China, four of them. Okay. Then you have JP Morgan, which is now the biggest bank in China. In America. Bank of America, HSBC is the biggest bank in Europe. Okay. It's from the UK. Then you have this other one. So this is a big list, okay? I'm sure most of us are not familiar with these banks. Maybe the one you might be familiar with because you know it is maybe Barclays, okay? Because it's common. I think now we know it as they rephrased it into ABSA here in Africa, but this is still the biggest, one of the biggest banks. It's the second biggest in the UK, okay? Now, my point is, okay, this person with 6.3 trillion doesn't mind having a $1 billion budget every year to pay to get fundamentals before you do. Remember, this is a competitive world. It's a competitive game. So first get to know who's playing the game right, who's controlling the game. These are the people who move markets up and down. It is not us, okay? The reason why market is going up is because of a fundamental, and the people who are going to push it up, CCCP, okay? That's why it's also not reliable to only focus on fundamentals, okay? Because this person one, the reason that they want to move the market, so they need the fundamental information. They have a 1 billion set aside yearly to get first-hand information first, wale wa kwanza, so that they can be the first ones to buy down here, and they benefit out of this whole move. While us, okay, now us, we're not the big banks, we're not the hedge funds. Who are we? We are called the retailers. Okay, the retail traders. We're just seeing what the big banks are doing, how they're fighting with one another. Sasa sisi tunatumia technical analysis just to come in, look at what is happening, what the big boys are doing, and we try to follow them. Okay, we just follow them. We're not trying to be the first ones to move market. Okay, you'll never find me trying to say I'm looking for where I can get to the bottom nikiwa kwanza kuingia. No. We're just looking to see what the big boys are doing, which is represented through technical analysis here, as you're seeing on my chart, and we trade with them. So this was just information. So you can go do more information on this one. Look at these people, big banks. If you want to understand how big this bank is, one more thing, just an extra information. If you go to trading economics, I believe Taras taught you this site for getting economic data or fundamentals data. Okay. Now, if you scroll down a bit, there's a list here. Okay, it's a list of countries being arranged according to how big their GDP is. Okay, gross domestic product that they can be able to produce per year. Okay, so go read on GDP, extra information. Now, if you can press plus, okay. Now look at this. United States of America has a GDP of 25 trillion. Okay, this is in billions. So 25,000 is 25 trillion. Okay, $25 trillion. If you look at this number four biggest banks in China, they just combine have more than 20 trillion. So already you know how big they are. But anyway, I want to show you now. Let's look for Kenya. Okay. If you scroll down, we are somewhere here. Okay, so our GDP per year is 113,000. I mean, sorry, 113 billion. Okay, 113 billion alone. If you look at the biggest bank, the big asset under management that they have here, okay, is 6.3 trillion, meaning they're 63 times bigger than the country of Kenya. And this is one bank, not combined. If you put combined just the big four, they're over 200 times bigger than the Bank of Kenya. I mean, bigger than the economy as a whole, the economy of Kenya. If you scroll down and look at number 100, okay, they're still 3 times bigger than Kenya, okay? Remember here, Kenya, we're only at 113 billion. The number 100 bank huko chini is 326 billion. So that's how big these banks are. It's just information, okay? Sisi Kenya, you can compare us if you go look for Bloomberg's, you can search on this, Bloomberg's Billionaire Index, okay? If you're a fan of looking at how the rich people are getting richer, just come and search for this website, Bloomberg's Billionaire Index. So here, you can come and see the richest people in the world, the top 500. It gives you the list of the top 500 richest people in the world. I'm sure you don't know number one, most of you, someone from France, the owner of Louis Vuitton, that's Bernard Arnault. Then we have Jeff Bezos, Koshao, Meskia, Elon Musk, Mark Zuckerberg, Bill Gates. Now you can see here Bernard Arnault is 200 billion. So this guy alone is 2 times bigger than the economy of Kenya, etc. Okay, so that's not the class for today. This is just sites I'm giving you guys. You can go play around. You're interested, come and start seeing. Like if your goal is to become financially rich, okay, it's important for you to understand this, how people are getting rich, because I get most people coming into my classes and I ask them in the first class, what's your goal for being here? Why are you here? And most of us, it's financial freedom, time freedom. So we want to be financially rich, where money is not a big concern, okay? And there are people who have attained that in life where money, like these people, money is not a big concern, and you want time freedom, okay? You want to come out of the shackles of employment, you want to start your own business, you want to do what you want to do, when you want to do it, and how, with whoever you want to do it. So those are the reasons why we are getting this information. We're looking to understand the financial markets. Now, as you're understanding Forex, it's important to look at the bigger picture. Don't just focus on Forex. Look at the bigger picture. Understand how money is moving from people, from these hands to other hands. How is money evolving around the world? How is money moving? So by following such people, if you look at such websites, you can understand. Like if you just look at the top 10 richest people, look, all of them tech. Okay, tech. You come here, retail. Okay, tech wako wengi. Okay, but that is not concern you. Why? Because the richest people, you guys have come to read about the financial markets, and the financial market encompasses a lot. It encompasses Forex, crypto, stock market, commodities, etc. Okay. Now, if you come and search, okay, so that I can show you, don't be shocked, because some of you might come out of class and say, me and so me tech. Now, don't be shocked. Why? Because if you search industry, okay, it's important to do research. Okay, just do research on your own. It's very free. As long as you have internet, you can get information. Industry with most billionaires. Okay, so you can come here, or millionaires, list with most millionaires and billionaires. Now you can see, okay, the industry with most billionaires comes from finance, not even technology. Yes, top 10, you're seeing technology here, top 10 are very many people from technology, but the industry with most billionaires and millionaires come from finance and investments. Why? Because out of each and every this technology person, okay, Jeff Bezos doesn't own 100% of Amazon. Elon Musk does not own 100% of SpaceX and Tesla. Mark Zuckerberg does not own 100% of Facebook, or better known as Meta these days. Why? Because as they were growing up, for them to become this big, they had to sell part of their companies to who? Financiers like us, okay? People who are willing to invest in your company. Now, you guys are learning to become investors and traders, okay? We are the people who push these people to billionaire status. It's just that he owns a big part of his company, Okay, he's the biggest shareholder, but along the way he sold to someone. Someone has 10%, someone has 5%, whatever percent. And that's why you come to see that finance and investment has the most billionaires, no matter what industry you're on. If you're in communication, if you work in Safaricom, if you work in manufacturing, technology, fashion, food, all these people need money. And that is why the biggest banks have this amount of money, investment banks, assets under management, because also them have invested in multiple companies around the world. Sasa, anyway, that was just a bit of extra information I was giving you. Let me stop there. I was just giving you to understand that finance is a big industry, that as you guys are getting into it, just know at the end of the day, if you put in the work, put in the time, don't give up, you're going to make it big. Hata sisi bado tuko kwa hiyo journey. You can't say tumefika, but tunasonga tu. The goal is to become. It takes time, but we'll get there. Sasa. So extra information. It's fun. It's good information. When you're studying about finance, try and look at the whole big picture. So back to technical analysis. That's the class for today. So let's focus on that. Okay. So like I said, technical analysis answers the question when and how. It helps you be right on direction and right on timing at the same time. If I just recap, if you're right on direction but wrong on timing, okay, then you're going to lose money as it's corrected, just for it eventually to move in that direction. So what I'm going to teach you today is to find, how can I find strategies, or which strategies are there that can help, okay, that can help me figure out when to buy, when to sell, so that I can make money when the market is moving up, and when the market is moving down, I can also make money. So yes, guys, that brings you to the end of the video. I know you expected a lot more, but all the rest I've stored for you in our course here at Financial Hub Forex Academy. I teach you everything, not only looking at the direction, not only putting things into perspective, but also looking at the big picture, when to buy, when to sell. Those are the important things you need to look at when you're using technical analysis. It's not all about the big picture and looking at the fundamentals. The technicals, putting it properly into perspective and context, is going to answer the question of when to buy, when to sell. And at the end of the day, that is what is going to make you money. So we are located here at Lavington Mall, Chandarana building, 4th floor. Come and we'll teach you everything, including risk management, psychology, backtesting, journaling, and how to come up with a plan. And all that encompasses your arsenal for trading successfully in the Forex market. So I'll see you soon. And as I always say, stay woke, stay financially literate. I'll see you on the other side.